I'm James Turk. I'm a director of the Gold Money Foundation, and it's my pleasure to be here today with Felix Zulauf, the founder and chairman of Zulauf Asset Management in Zug, Switzerland. Felix, thank you for joining me today. I've got a number of questions that I want to ask you. I know you're one of the premier global macro thinkers in the world today, and I wanted to start with what's happening here in Europe. The debt crisis, not only in Greece, but as it seems to be spreading to others. Is the debt contagion, the sovereign debt crisis, going to continue to worsen?
I think so. The situation in Europe is similar to elsewhere, but it is compounded. The high debt is compounded by this euro situation. And the euro is a terrible construction because you have a line, a rift going between the center and the periphery. The center is basically a nation like Germany that is a saver and accumulates current account surpluses. And the periphery, those are nations of debtors, and they accumulate debt. And a debtor nation is interested in inflating its way out of debt. And a saver nation is interested to save and have a stable currency value. And therefore, the conflict between the two is of profound depth and cannot be solved in the short term. And that is a conflict that will take time and probably several years, and therefore we won't have a final solution quickly. Mm-hmm. And in the meantime, without having a final solution, be it the fiscal union or whatever, is one crisis after the other. And each crisis can bring those two parties one small step closer to each other without bringing the final solution. And usually politics is two steps behind the markets and the realistic real economy situation. And therefore, there are some risks that we are going to risk our banking system, which is very fragile, very low equity capitalization. And it's a horrible situation.
A crisis, you say, can bring people together, but it can also move people apart. Isn't the crisis seem to be causing people to move apart? There seems to be friction now between different countries that probably didn't exist a few years ago.
Actually, you are right, and I said it at the hour of birth of the euro, that the euro will bring what it should prevent, namely rising nationalism. And I also said the euro has the power of dynamite, like the Versailles Treaty of 1918, in a way. It disintegrates, it is a disintegrating project and not an integrating project as the politicians try to tell us.
Yeah, you've been a Eurosceptic for quite some time. I assume you remain a Eurosceptic?
Yeah, definitely. I don't see that the European people are ready for the United States of Europe yet. Therefore, we won't have a political union. Without the political union, it will be very difficult to achieve a fiscal union, liability union. Therefore, it can be only small steps towards in that direction, but not a big step that would solve the problem. Yeah. And that means that eventually politics is moving the burden to the central bank, to the ECB. The ECB wanted to pursue and follow the philosophy of the old Bundesbank of money stability, but it will be forced and pushed into the other direction, and I fear that the ECB will eventually become like the Fed, a money printing entity like mad, and that means that they have to weaken the euro in a way that even the weaker nations can live with that currency.
Yeah, but isn't that what the ECB has become? It's become controlled by the politicians rather than being independent. You know, the fact that it bought the Greek bonds a year and a half ago and it's now got 160, 170 trillion of sovereign debt on its balance sheet, even though the EU rules say that it's not supposed to do that. Hasn't it already become a Federal Reserve, a politicized institution?
Absolutely. The ECB has been raped by the European politicians, definitely. And I think, I said at the beginning, the central bank, the ECB cannot win that battle. It will lose. The politics will win. And that means we are very close to a change in the ECB policies. They still remain tight with liquidity and too high with short-term interest rates for the crisis situation we are in.
Yeah.
But on the other hand, they try to fix this and that problem by intervening in bond markets. But actually, I think they should rather spend the money to fix the equity capital of the banking industry.
Good point. In its present financial state, would you say that the ECB is bordering on insolvency, given the fact that they've acquired so much sovereign debt from the periphery countries?
Well, if you look at the numbers very carefully, it's clear that they have a negative equity capital at the present time. If you mark their investment side to the market. There's a big debate going on in Europe whether central banks need equity capital actually or not. I have met some senior politicians just recently and we debated that, and I think last week the Vice General of the Swiss National Bank, he gave a speech and he talked about that central bank could live without equity capital for quite some time. I'm not in that camp. I think this is a question of credibility. A central bank without equity capital or negative equity capital can remain solvent or liquid, can remain liquid. But if you want to be credible with your monetary activity, which is so important to the system, you have to have a solid balance sheet. I do not believe that the central bank without a solid balance sheet will be able to create credibility that is necessary in today's world.
Yeah. Will the ECB need to get more gold reserves from the various national central banks to increase the quality of its balance sheet?
That is a possible step. That is a possible step. I'm not sure the Germans will like that idea, nor do I think the Italians will like that idea. But it may be one of the steps that will come over the next couple of years in that process that I described. There will be mini steps here and there to introduce more credibility, to fix the situation as it is, but always lagging 2 steps behind reality.
Yeah, these are short-term fixes. These are not long-term solutions.
These are just temporary band-aids.
Yeah, and as a consequence, will the euro survive? If you keep band-aiding it instead of fixing it.
Yeah, I cannot tell you. I do not know the future. I've never been there. But the precondition for the euro to survive are not very good, because the economic issues at work are actually working in the other direction. And it would need a quantum leap forward by the Germans to really finance the periphery to a large degree to make it work. And I doubt that the German public is ready to allow its political leaders to make that step. And after the recent judge discussion, actually it is limited to make further steps in that direction, Germany.
Yeah, but the German people don't want to be anti-European either, do they?
Yes.
So it's a dilemma.
That is a dilemma, and that's the whole dilemma we are in. The European people like the euro. Big industry likes the euro, particularly in Germany. They like the euro. They have a home run, of course. Mm-hmm. But I do not believe that they all know what the final costs of keeping the euro will be. And that's the problem.
Yeah, and we won't really know that until we see the present situation and the various problems that arise. And if they do the wrong fix for a problem, ultimately that could create some serious issues.
Disruptions. Could create serious disruptions. And you know, the Germans obviously believe that the Italians and the Spanish and the Greek could do what the Teutons would do, and Germany would deflate, and you can do that with the German people, but I doubt that the periphery can do that. You would have to go through a major cultural change, and it will be so painful that there will be political backlashes and there will be government changes, and that's why I think you cannot come together to a final solution quickly. It will be a multi-year process with lots of pain in between and only baby steps.
Yeah, what does an investor do, to protect his wealth in this kind of a period of uncertainty? I guess you avoid the debt of the periphery countries, but do you want to have even AAA debt? Do you want to own the German government debt if it's euro denominated and there's an uncertainty with the euro?
No, you don't want to do that, because the risk is very high that eventually they have to cave into some of the requests from the
inflationary pressure.
And I doubt that we will have a lot of inflationary pressure in the next few years. Maybe later on. I rather think Europe will go down the Japanese way, that we will have no growth, maybe net a certain shrinkage over a longer period of time, over the next 10 years, and a decline in prosperity. Problems here, problems there, one crisis after the other. We have a less homogeneous population, of course, and some of the European cities could burn, no question. So it's a very difficult situation, but as an investor, you rather buy, if you want to buy bonds, which is probably not the most attractive investment for the next 10 years, then you rather stick to corporations that have their own house in order and solid and clean balance sheets.
And preferably a corporate bond that was even convertible in case the currency did go into a period of high inflation.
You stick with a corporation that is in your own country. Let's say for a German, stick with a German company that in case there would be national currencies again, you are in your own currency.
Okay, let's move outside of continental Europe, across the Channel to the UK, and maybe even at the same time across the Atlantic to the US.
Oh, are we on a world tour here?
Well, the main spots.
Okay.
What about the debt in those countries? Are those attractive safe havens or alternatives to the euro?
Well,
the UK is still AAA. The US has lost its AAA rating.
Well, the UK is not AAA. I mean, it's still rated AAA, but it's not AAA. You see that the UK doesn't have its house in order, but they do have their sovereignty. They have control over their own currency, and therefore they can hold out longer than Italy can, for instance, or Spain or so. So it will drag on, but from a certain point onwards, I mean, they are trying something that will not work. It is the right idea, but at the wrong time. You cannot go into fiscal austerity without virtually killing the patient. At the present time, with such an extended debt situation in our system, going into fiscal consolidation and cutting government spending pushes the economy down into a deflationary situation, and that will eventually increase government debt dramatically, because at the end of this spiraling down, the government has to rescue it time after time, and when it's bad enough, they forget about fiscal austerity and they will give a fiscal push again. Monetary policy doesn't work. They are trying that, but in an over-indebted situation, an economy does not work with monetary push.
But isn't that the key, that there is so much debt, that more debt is not going to solve the problem, whether you're looking at Europe, UK, or even the United States?
It's a practice in procrastination.
Yeah, so it's basically the line of least resistance to try to keep things going without really facing reality of the problem?
That's right.
It's sort of bleak, isn't it, then?
Well, it's, I cannot tell you the time when things will unravel, but obviously this will not lead to a solution. It will lead to more problems.
Rather than facing the fact that they're on the wrong road and it's difficult politically to turn around and go the right direction.
Yeah, it's politically suicidal.
In this kind of environment, and I know from your roundtable discussions at Barron's, you've been basically suggesting that people hold some gold in their portfolio?
Definitely. I do believe that even though monetary policy doesn't work, monetary policy can finance government budgets. And you will see more and more of that, and at an increasing time, which is a deflationary policy. Right now we are in such a deflationary process that it doesn't show up yet as new inflation in terms of CPI, but if continued, it will at some point of time. And basically we are in a process of debasing our currencies and think we can grow out of the problem, which won't work. And we have negative real interest rates in virtually all the major currencies. And when you have that situation, the currencies all decline against the value of gold. So expressed in gold, we are now in the second big decline of paper currencies versus gold. The first decline was in the 70s. Then we had a period in the 80s into the 90s of high real interest rates. You had a stable currency situation. Now we are in the second decline, and I think that we'll have another couple of years to run.
Yeah, well, at least a couple of years in the sense that I know Mr. Bernanke is saying that interest rates are going to stay low until 2013, and the inflation rate in the US is picking up. I think the inflation rate here in Europe now is running over 3%, if I'm not mistaken, and in the Eurozone. UK, the inflation rate, their target is 2%, and they've been running, I think, 3.5%. So inflation is picking up in some of these locations, and you do have negative interest rates.
Yes, that is true. However, we have now a global economic slowdown, and I think that means we will have more slack capacity opening up in the world economy. So prices of some of the products that consumers buy will go down, and therefore I think for cyclical reasons inflation rate will decline over the next, let's say, 18 months. Then it will be important to see how far that rate declines and at what time the political decision makers come in and create new stimulus. Right now, fiscal stimulus is out, I know that. I think at the end of the day, and I expect that towards the later part of next year, probably in 12 months' time, they will come out with a new fiscal stimulus package because the system will be at the brink of collapse again.
Another round of quantitative easing.
Well, you know, Einstein once said, if you do the same thing again and again and you expect a different outcome, that's the explanation of being dumb.
Yeah.
And it doesn't work, but they will do it again because they have not learned anything else.
But that's
Bernanke is just printing money because that's what he have learned, and he's applying his model and his theory on the current situation, although it's a pretty different situation than in the 1930s.
Yeah, of course. First of all, you didn't have the level of debt that
we didn't have the same level of debt, and we had a gold standard.
Exactly. So to cause the money supply to contract as people moved from paper into tangible assets. But you know, that's the theory. The theory today is money printing to solve all problems, even when it doesn't solve the problems.
No, it won't. But we are not at the point where they admit it.
Yeah. And
they will try again and again.
Will they ever?
I cannot tell you how often they will try. You know, at some point the market will force them into some other painful decisions, and I cannot tell you what it will be. I mean, the banking system could collapse, currencies could collapse. You will have more government controls everywhere, and pretty dirigist economic situation all of a sudden.
Yeah. The situation presently feels to me a little bit like it did in the run-up to the Lehman Brothers collapse in September 2008. Is that your sense as well, that things are that fragile within the banking system globally that there could be another Lehman?
Yes. I mean, most of the market observers and investors agree that Greece will default, and Greece is bigger than Lehman. Greece in total has about 800 billion euros of debt, government debt and private debt. I would expect that at least about 500 billion would have to be written off. That's bigger than Lehman. That's why although everybody says, well, that's a small piece, etc., etc., it's not such a small piece. It will hurt. And we don't have a banking industry that has the shock absorber, high equity capital that could just take it and move on. Therefore, there will be a banking crisis, and eventually I could see nationalization of some banks because they cannot make it, and contagion effect would be too dangerous to let it run.
Mm-hmm. All the more reason to own some physical gold in your portfolio as that hedge.
Absolutely. I just believe that the gold price at 1900 hit the upper end of a long-term trend channel. We had a disappointment about Mr. Bernanke because the market, the gold bugs, expected QE3 and he didn't deliver. And we had all the technical readings that were the most extreme in about 25 years. So we need a correction, and we had a slumping down by a couple of hundred points. And I do believe that we need several months of base building to prepare the platform for the next move up.
Felix, thank you very much. Really appreciate you providing this insight. This is going to be viewed by thousands of people around the world. Is there any last comment that you would suggest that people think about as we go forward from here?
Well, I'm not really prepared for that question, but I would say make sure that you have a job, you have income, you have a happy family life, be very well organized privately, and if you have all those factors in line, then you will make it and the world will not come to an end. It will be a bad time and painful time, but you will make it.
You'll be able to get through.
That's right.
Felix Zulauf, Chairman, Founder of Zulauf Asset Management, thank you very much for being with me today.
Thank you, James. Thank you for having me.
It was a pleasure.